I mean, we all need like.
So, the idea here is we're gonna shift from talking about like a proprietorship, which is like a single owner business usually, or typically like a service industry kind of thing, like you're, like you have people that do a job and collect money for that, doing that job, and that's kind of your business, right? You're not really buying and selling things, so to speak. You're basically just, like doing work for money, right? In chapter 9, we're gonna be transitioning to like a corporation situation. So that can include, still like service industry stuff, but also like retail, like buying and selling things. So we're going to kind of be building up some vocabulary to describe the different types of like, business stuff. This is again outside of my area of expertise, so I'm catching up along with you guys while we're doing this. So we're going to start by just kind of focusing on like a merchandising business. So this is like your typical retail store, right? Like you go to, Dick's Sporting Goods, and they're buying things from, Nike or Reebok or Adidas or whatever, and then putting them on their shelves and selling it for more than they paid for it. That's how they're making the money, basically, right? So we say goods that a business purchases to sell are called merchandise. A business that purchases and resells goods is called a merchandising business. A merchandising business that sells to those who consume the goods is called retail merchandising business. So that's like our Dick's Sporting Good example. A wholesale merchandising business buys and resells merchandise primarily to other merchandising businesses. So, for example, like Nike has a aspect of their company that does wholesale merchandising because they're selling their product to, like Dick's Sporting Goods, who is then reselling it to you at a markup, right? Does that make sense? And like most of the stuff you buy in the shelves, you're buying retail, you're not buying wholesale. That's kind of the business model of like Costco, is that they're giving you the wholesale price and you're getting like, 40 gallons of ketchup for like half the price you pay for the ketchup in the store, but you have to buy 40 gallons at once. But that's the idea, right? Everybody feel okay with the difference between like retail and wholesale? Right? Fairly easy. A corporation is an organization with legal rights. Oh my gosh, that was so fast. Oh, okay, cool. Good showing, Cameron. The corporation is a organization with legal rights of a person, which many persons or other corporations may own. So the assets or other financial resources available to a business are called capital. Again, these should probably fairly straightforward definitions that even if you haven't like thought about this stuff before, it's kind of in general knowledge kind of stuff. So the difference between a corporation and like a proprietorship is that a proprietorship is owned by like a single individual or a few single individuals. A corporation is owned basically by a large group of individuals, and they all have some small percentage share of the company that they bought via stock or been given via stock. So the owner of one of these units of stock are called stockholders. And the total shares of ownership in a corporation are called the capital stock, right? So And then, like, if you want to get really technical into the stock market, there's different kinds of stocks, right? Like, General Motors has, like, public shares of stock, and then they have, like, the privately held shares of stock, where only so much of the corporation is actually available publicly, the rest of it is held in the family or whatever. Anyway, continuing on. The Articles of Incorporation is a legal document that identifies basic characteristics of a company and is part of the application to a state to become a corporation. What state are most places incorporated in?
The state they're based in.
Delaware. For tax reasons.
Oh.
Is that Delaware has like really loose corporate tax rules, and it's, if you look at the Articles of Incorporation, and almost all domestic companies are incorporated in Delaware for whatever reason. It's a weird, random, it's like, why Delaware? I guess that's the reason. I think that's the case. You'd have to double check that, but I think that was, I remember reading that or hearing that somewhere. A state approves the formation of a corporation by issuing a charter that's the legal right for a business to conduct operations as a corporation. And again, remember, as a corporation, you basically have the legal rights of an individual. That's the idea. All right. So getting down to accounting vocabulary here. So we're kind of narrowing down from big, broad ideas into more narrow ideas and vocabulary. A business from which merchandise, supplies, or other assets is purchased is called a vendor. So for example, if you're the Dick's Sporting Goods Corporation, one of your vendors would be Nike, because it's somebody you're buying merchandise from. A ledger that is summarized in a single general account is called a subsidiary ledger. Accountants are often referred to a subsidiary ledger as a subledger. So like you're getting ledgers inside of ledgers now, because if you're a corporation, you know, your account for Nike may include like millions of transactions or something. The subsidiary ledger containing vendor accounts is called an accounts payable ledger. An account in a general ledger that summarizes all accounts in a subsidiary ledger is called a controlling account. So now you're starting to see, like, remember our basic structures, we go from recording transactions to a journal, journalizing those transactions into a ledger. When you're a proprietorship, you're probably not doing so much volume that a ledger alone can't handle all the volume of transactions you're doing. You start operating at the corporate level and you have like hundreds of Dick's stores around the country. Your ledger for the vendor Nike is going to be enormous and probably needs to be split into sub-ledgers inside of that pertaining to your different store locations or whatever. Does that kind of make sense as to what we're describing? All right. So the idea here is that we have our, let's see, I did some, no, that didn't really do what I thought it was going to do. All right, so we have like our accounts payable ledger. Inside that ledger, we have a bunch of subsidiary ledgers, right? Representing different companies in which we have accounts with. We can take all of the accounts or all the debts we owe to these other corporations. We consolidate that debt into one number that goes into like the controlling account for our accounts payable that represents all those. You're good. All those sub-ledgers. Does that make sense visually, kind of what we're describing?
Yeah, it makes a lot more sense seeing it.
Yeah. Okay. So the way our subsidiary ledger forms look like. So notice here we have our our overall account, our overall ledger account is accounts payable. Inside of that account, one of our subsidiary accounts is for Bearden Chemicals. So that we have the same headings for our columns in either one. In the subsidiary account, we have the vendor name, the vendor account, or the account number, the vendor account number. Inside of that larger ledger, we date it, we write the term balance, so that's how much is currently owed to Bearden Chemicals. We check mark the post reference because this isn't referred to, we're not shaking this or pulling this number from somewhere else. This is like the source document. And then we have our account balance. Primary difference between retail and wholesale merchandising businesses. It's who you're selling to, right? As a retail, you sell to the public, right? As a wholesaler, you sell it to other retailers, right? Businesses. Everybody's cool? What allows a corporation to own property, incur liabilities, and enter into contracts in its own name? That's its articles of incorporation. So it's once it's incorporated as a corporation, it's granted the legal rights of an individual. So a corporation can buy property and make investments and enter into contracts and do all these sorts of things that an individual is able to do that, like, you couldn't say, like, my car is going to do this, right? Like, legally we can't, like your dog can't buy a house. It's not an individual. Now, you could form a corporation and the stockholders could be, like a bunch of people, and you could buy this house as a corporation. And it's not owned by anyone, it's owned by this entity, this corporate entity. What is the principal difference between the accounting records of proprietorships and corporations? So the proprietorships have that single capital and drawing account for the owner. A corporation is going to have separate capital accounts for stock issued and for the earnings kept in the business. I don't know where I mentioned that earlier. This slide sometimes leaves stuff to be desired. The relationship between a controlling account and a subsidiary ledger. The subsidiary ledger accounts, if I sum them up, should be equal to the balance of the controlling account. Just like in the illustration we had before, right? We had all those accounts payable, subsidiary accounts, and when I summed up the balances on all of those, that would be the balance on my controlling account for accounts payable. What column on a general ledger form is not on an accounts payable ledger form? Don't remember. Debit balance, apparently. Oh, sure. Why is that?
Because the ledger form would be like liabilities and such.
Well, the accounts payable ledger, is it going to have any debits on it?
No.
No, because that's the money you're, owing to other people or whatever. That makes sense. All right. Do you want to stop and do the 9-1 together, or do the 9-2 notes and then do both the things back to back?
No, just do
9-1.
the notes first.
Okay. Just keep plowing through on the notes and we'll do both pieces together, back to back. I think would be my preference also, but I'd like to ask you guys what you want to do. There's like a million slides on this one. I think, again, mostly this is just vocabulary at this point. There's not a lot of accounting, so to speak, yet. So we're gonna start by looking at one of these merchandising businesses and kind of how we track our accounting for that. So we're gonna talk about procedures used in ordering merchandise, the concept of a special journal and kind of how that's used, and then how we journalize purchases of merchandise using that special journal. So, more vocabulary. A list of assets, usually containing the value of individual items, is called an inventory. Right? If you're a merchandising business where you're buying and selling things, you should know how much stuff you have in the store and how much that stuff is worth. That's essentially your inventory. The goods a business has on hand for sale to customers is called merchandise inventory. Shocking. An inventory determined by keeping a continuous record of increases, decreases, and the balance on hand of each item of purchase is called a perpetual inventory. Have you ever, like, gone online to look to buy something like at, Home Depot or Walmart or whatever, and you're looking at, oh, can I get this at the store down the street from me? And you look at the website and it's like 7 still in stock or whatever. Most of the time you're like, yeah, right, I don't believe you. But that's kind of the perpetual inventory. That's kind of the point of it, is so you know at any moment how many of these things you have on hand. That makes sense? How many times have you gone to the store where they said they had it and they're like, how do we not have that?
On the wall.
Yeah, Home Depot is terrible about it. So there's kind of 2 ways to kind of track an inventory. So we say a purchase inventory evaluated at the end of a fiscal period is called a periodic inventory. When a periodic inventory is conducted by counting, weighing, or measuring items of purchase on hand, it is called a physical inventory. So again, like if you're at the used car lot and it's like, okay, we gotta go back out here and check to make sure that like all the cars we say are on the lot, pretty big deal if one of them's missing. They gotta figure out what happened to that. That's a pretty high dollar item. Probably gonna do a physical inventory, right? If you're working at, like the grocery store, you're probably not counting the boxes of macaroni and cheese that are on the shelf because it's not worth it to you because it's not a high value item. So there's good reason for doing a physical inventory when it comes to the more valuable the item, the more like I gotta check and count these things by hand because we're talking if one of these things is missing, it's a lot of money versus 79 cents or something for a box of macaroni and cheese. All right. The amount a business pays for goods it purchases to sell is called cost of merchandise. A form requesting the purchase of merchandise is called a requisition. A form requesting that a vendor sell merchandise to a business is called a purchase order. So like, if you're the manager at Kroger and it's like, hey, we're out of, like Coca-Cola, we need to make sure that we buy some, you fill out a requisition form for the manager, or for the purchasing manager. The purchasing manager then puts in a purchase order with Coca-Cola to make sure that, you get some more come on the truck tomorrow or whatever. So here's an example of a purchase order form. Everybody's okay with that? Typically, the piece that's of import to your accounting and the receiving people is the purchase order number. So see the PO number at 153, that's typically the thing that you're gonna be needs to be attached. All right, using special journals. A journal is used to record only one kind of transaction. It's called a special journal. So again, businesses typically use 5 types of special journals. So there's the purchases journal for all purchases of merchandise on an account. Cash payments journal for all cash payments. Sales journal for all sales of merchandise on account. Cash receipts journal for all cash receipts. And general journal for all other transactions. So again, as a business, you can imagine you're doing like to record all this stuff in one place, it becomes really overwhelming, and lacks a lot of organization. To separate things into, different categories makes a lot of sense in terms of just trying to keep track of everything, especially if you're doing a lot of business at volume, Okay, the purchases journal. A transaction which items purchased are to be paid for later is called a purchase on account. Right? That's typically how most businesses buy things. It's like, hey, I need, 60 widgets, and the widgets company mails you out 60 widgets and then a bill to pay them for their 60 widgets. A purchases journal is a special journal used to record only purchases of merchandise on account. So that wouldn't include like, hey Phil, here's $20 from petty cash, run out and buy some paper towel. Like that's not an on account purchase. You bought that a different way. Versus, me sending a request to the Brawny Corporation to be like, hey, I need 32 gross of paper towels. And they show up on a truck and they hand me the paper towels and then the bill, right? A journal amount column headed with an account title is called a special amount column, and we'll look at an example here on the next slide. So here's our example of a purchases journal, and our special amount column is not on this one, apparently. Okay. A purchase invoice. An invoice is used as a source document for recording a purchase on account transaction. It's called a purchase invoice. So that's like the paperwork that comes with your 150 gross of paper towels that you get off the truck. An agreement between a buyer and seller about payments for merchandise is called the terms of sale, i.e. like, hey, I'm going to give this to you now and you have this many days to pay me. The date by which an invoice must be paid is called the due date. Shocking piece of vocabulary there. So example of a invoice is here. So again, this would be what comes with your shipment that you're handed. This is your invoice. It tells you how much you owe. It tells you the delivery date, the payment date, all that jazz on there. Typically, when an invoice is received, the employee that receives that invoice is going to initial the invoice with the date received, and the purchase invoice number. So that's the 525. If I scroll back, is this not the same purchase? Oh, it is. 525. Oh, okay. All right, whatever. Okay, everybody's okay? So let's talk about how we actually record one of these transactions. So this guy's purchasing merchandise on account. So November 6th, we purchased merchandise on account from Win Lighting for $1,082.50. Purchase invoice number 525. So I have a debit to purchases and a credit to accounts payable. So in my purchase journal, I record on November 6th, Win Lighting, purchase number 525. My account is credited at $1,082.50. Okay, that puts us to the end. The difference between a periodic inventory system and perpetual. Perpetual you do in the moment, you update your inventory in real time. Periodic is you do a check at the end of the fiscal year, basically. So it's and it says here that the periodic system is typically you do like a physical count as well at that end of the fiscal year, right? Because you really got to know, because how else are you going to know? You're not keeping constant track of sales and whatever. When the perpetual inventory system is used, in what amount are purchases or what account are purchases recorded? In what account are purchases recorded when the periodic system is used? So for a perpetual system, those purchases are recorded in the merchandise inventory account. In the periodic system, purchases are recorded in the purchases account. Identify the 4 special journals typically used by a business. Cash payments, purchases, sales, cash receipts, and the 5th one was general, which is what we've been using as a proprietorship, so that's not unique to a business or a corporate business. How are special amount columns used in a journal? They're for frequently occurring transactions. Why are there 2 account titles in the amount column of the purchases journal? So if we went back and we looked, there was like, so if you look over here, right, purchases, DR and accounts payable CR, there's like 2 things in that column. That's what they're talking about. So that stands for your debit to purchases and credit to accounts payable, because both are happening at the same time. Yes, sir? Sure. What is the advantage of having that special amount column in our journal? Eliminates writing general ledger accounts in the account title column, which saves time and helps reduce mistakes. Basically, it's a time saver. What information is contained on a purchase order or purchase invoice? The invoice lists the vendor name, address, date, quantity description, price, total amount of the purchase. Let's cue up our Cengage and take a look at these. Fire up, Cengage. So we're now into part 2, chapter 9. Yes.
It's real.
Okay, I'm looking at the 9-1 work together right now. I think this might be the only assignment for 9-1 if I'm, yeah.
Oh, plus the application problem.
Plus there's an application problem. You've been asked to start a new accounts payable ledger for Warren River Supply, account number 240, with a balance on October 1st of the current year of $1,489.50, and a new accounts payable ledger page for Zodiac Industries, account number 250, with a balance for October 1st of the current year of $2,491.80. Enter this information in the ledgers below. And I think I did this already. Is that what we're looking at here? Yeah. If there's no value to be entered in a specific field, or if the value of the item is not relevant, leave the field blank to ensure correct grading. To indicate a post reference field is not posted, type the letter V without parentheses. So again, I just recorded what it said, right? I have 2 subsidiary ledgers for the accounts payable ledger. One for the vendor Warren River Supply, the other for the vendor Zodiac Industries, and I would record any further transactions from these companies in these subsidiary ledgers or sub-ledgers. What do you guys think?
Not too pretty simple.
This was
It's
like,
good to have a little like.
yeah, like this seems like we're starting over again almost, where it's like everything's pretty simple. All right, so that's that. Let's look at 9-2 together. Start the assignment. I think this one might already be finished also. I went through and did some of these to make sure I could do them. Okay. So it says, using October of the current year, journalize the transactions for Golden Fabrics on page 10 of the Purchases Journal. Purchase invoices are abbreviated as P. No P is needed in the purchase number column. Okay, so my first happened on October 2nd. Oh, I put in page 10 because it told me it's page 10. Pacific Supply was the name. My purchase number was 162, and the amount was $3,252. And then I did the same thing for each of the further transactions. That's like all she wrote, guys.
Nice. Murder, She Wrote?
Murder, She Wrote. Get it, Angela. I don't know, what do you guys think?
That's great.
Piece of cake? Oh my god, that's
Is that how you think? Is that how you think, Rhonda? That was horrible.
Yeah, no kidding. All right, what do you guys think? Yeah, we're good?
Great.
Piece of cake?
Yeah.
I think this would be all right.
We'll keep it.
Oh, it did. It made me jump though.
And they made me jump at it. You know, when you're like, you're because you get like a little bit scared. Yeah, your cortisol. Your cortisol, yeah, dude. Toronto, why would you do that? No, it's not my fault. Toronto, stop raising my cortisol. That's my bad.
You'll never see it.
Okay, so those are my guys.
We're real bad.
They're available today. I'm gonna set the due date on this as Friday at the end of class. that meet it with everybody's approval?
Yeah.
All right, what do we end at? 12:30? 12:40? Glad somebody knows. Oh my God.
Did you see the dog eating game for the
Why does the available date have to be in the future again? You stupid computer?
That kind of ruined my day a little bit. Actually, did you see the?
That's because the available time.
These guys are being correct.
Actually,
Was
did you see the Viking video? And this zombie apocalypse one?
so weird.
It's so weird. The zombie apocalypse one.
Oh my God. Whatever. Must be in the future. It is the future. There then. Okay.
What could be so?
How's life going in general here, dudes? Good.
Life in general, tiring.
Yeah,
I'm gonna be honest.
I get that.